I still like Nebius Group. The last time I talked about this stock, it was trading around 40. Now it's trading at 91 on some huge news on the 9th of September. We will get into it. I will interpret what the news means for the future of the revenue of this company. But first, I will also talk a bit around the megatrends that's really driving business for Nebius, really driving stock price. Nebius is a managed service provider, a colo basically. So they're hosting a data center and they take care of the workloads, the data for the companies who are their customers. They can sell a bunch of different things, everything from S3 object to compute to different IT services. It's highly in demand. You need multiple copies today of data. Some have one on-prem, in a public cloud, in the managed service providers. Some use 2 managed service providers, one as a primary site, one for replications. And we're even seeing a new type of title out there with different companies. IT services manager. Used to be mostly just IT operations managers out there, but it's a different title now in companies to manage relationship, contracts with service providers such as Nebius Group. And the reason for the 40% increase today is a huge enterprise contract with Microsoft. In this case, we need massive compute for AI workloads, run a lot of simulations. This is most likely a pay-as-you-use type of contract. They've reserved capacity in the data center. Those servers belong to them now. They're rented out. And as they continue to use compute, they're likely to get billed OPEX. So it's an operational expense. Quite nice for the perspective of Microsoft. They have a demand spike. They're not sure if it's going to be prolonged or not. They just rent capacity. It's capital light for them, and they get the compute that they need. And very nice for Nebius as well, who of course have a lot of capacity and rent out the spare capacity. That's the business model. Very, very popular. Revenue numbers are growing rapidly and they are profitable. Fantastic. This means that this 7.4 to 19 billion that they're talking about that the contract is worth, it's not going to show up in the next quarterly earnings or the earnings after that. The full number is going to be spaced out all the way up until 2031, because according to accounting principles, you can only realize this as revenue once the service has been provided. That's the way it is in accounting. And this is a signal that investors can expect large growth ahead. Fantastic. They're likely going to need to expand, do more capex, Nebius, buy more compute, more servers, more storage, more network, everything. And they're going to be able to scale up more. You have your hypervisors, you have all of the software running, and the system admin who's provisioning the servers. He doesn't, every system admin can run, thousands of servers. So you have that cost in place, and you scale it, and you get the economies of scale even larger. Not a lot to do, you change a few disks that are not working, or if you have all flash in there, no need for that. Those disks don't break. Just economics of scale. And that's why stock is increasing so much. We're gonna most likely, in my opinion, see greater profit margins and greater revenue going forward. An announcement of a massive contract. It not only shows that, alright, revenue is gonna be great just from this, it also shows that the salespeople at Nebius have the capability to close very, very large enterprise deals. If they've done it once, they can do it again with another enterprise-sized companies. Could do it for Google or Amazon or Meta or whatever. I don't think Amazon is very likely, by the way, but Meta or Google or some other company in the AI space. Of course, they're also going to see growth from the corporate segment, as we call it, just below enterprise. They need a lot of these services, and the market is only getting hungrier and hungrier. What I really need to do is to take a look at some of the competitors of Nebius Group, see who's listed on the stock exchange, and do some peer comparison. See if I can find a value gem in there. Take a look at some of the employees on LinkedIn, see experience, see the different services that they can provide. But even Nebius in itself is nicely priced still, with the backwards price to earnings of 73. This number is likely to come down in the future as growth slows down a bit in the future, perhaps when the market cools a little bit. But as for now, they provide IT consumption for businesses in a way that's extremely popular. This OPEX model means that businesses who need IT do not have to make a large upfront purchase, but can just make small incremental purchases as they go. And this is something that management likes. This is a business model that's extremely popular in the Nordics, and I think that we're just going to see more and more local service providers out there as these smaller data centers that they provide. They're smaller than the large public cloud providers, but they many times have the closeness to the customer, so you don't get that latency in the network. And that's important too. So it's just a superior model compared to public cloud, in my opinion. And I think that businesses see this the same way. We see it in the revenue numbers. I see it when I talk strategy with companies, with the IT managers, the CIOs. A lot of them are outsourcing. A lot of them. And that trend's only gonna continue. And when that trend continues, the stock price of companies like Nebius Group is gonna increase. Alright, that's been it for this video, covering Nebius Group here. Talked a bit about this large enterprise contract with Microsoft. As always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.